Stocks stay range today as early earnings present a mixed picture. Real estate as well as consumer durables lose ground while capital goods and energy eke out gains. Mid-caps underperform today.
RBI wraps Kotak Mahindra Bank for inadequacies in its IT infrastructure that has led to frequent outages by asking it to stop onboarding customers via online and mobile banking and from issuing fresh credit cards. Experts expect the resolution taking many months to resolve the stock slumps.
A surprisingly strong interest margin and improved asset quality lift the Axis Bank stock, but Hindustan Unilever sulks on providing a muted outlook on the back of mostly in-line numbers.
And the AV Birla Group chairman Kumar Mangalam Birla is confident that Vodafone Idea will make a strong comeback after its 18,000 crore rupee fundraise. He also dismisses any talks of the sale of shares by the government.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar and with me is Sonia Shenoy. So Sonia, it's a market where in a very tight range, it has been volatile. So at the moment, let's take stock of Nifty 50 and it has moved into the green again and is gaining momentum, 0.2% up. So next half of the trading session starting lunchtime needs to be seen carefully. 22,443 levels. Around those levels is where Nifty 50 had opened today, but it had been a swing of 175 odd points between the low point and the high point of the trading session. Now Sensex, that is gaining over 150 points at the moment. Bank Nifty has perked up again in the last 15-20 minutes of trade and is 0.3% up in trade. Mid caps are trading again in line with the other indices at the moment. So it's a 0.2% kind of a gain across all indices. Advanced decline ratio in favor of the advances with some bit of broader market participation. But Kotak Mahindra Bank, because of the RBI's news, has really slumped in trade. And on the flip side, there are two big gainers from the banking space, probably also capitalizing on this. Axis Bank because of the strong results and the big boy State Bank of India. These two are the big heavy hitters in trade today, Sonia.
Oh, absolutely. And, you know, if you just look at it, right, I mean, it's not a bad outcome for this market, very flat with a bit of a positive bias. When we started off the day, actually, we started with some negative news flow, right? So the Nifty built on to its gains, the dips were getting bought. This is an out-and-out bull market, let's make no mistake about that. There was large buying by DIIs, domestic institutions yesterday as well. And the momentum is very much intact, of course, with a little bit of volatility here and there. So let's talk about the big stocks in focus. Kotak Mahindra Bank, the stock hit a lower circuit in trade today after the Reserve Bank barred it from onboarding new customers through its online and mobile banking channels and issuing fresh credit cards. The action came after the central bank cited concerns over the lender's compliance and risk management practices. Ritu Singh is joining in now with all the details. Ritu, what does this mean for the bank?
Well, RBI's action comes as a setback for Kotak Mahindra Bank, which places digital at the forefront of its strategy for customer acquisition and servicing, and which has seen its high-margin credit card business growing rapidly of late. Take, for instance, its credit card business, where the market share in credit card volumes stands at 5.8% and spends about 4.4%. Now, while the portfolio at a little over 13,800 odd crores stands at under 4% of the total book, it has been growing very fast at 52% year-on-year. On the digital front, as of FY23, 72% of new savings accounts were opened through its digital channel, Kotak 811, and in Q3 of FY24 alone, 99% of new credit cards sold and 79% of new business loans dispersed were done digitally. So this ban is bound to hurt the business. Now, the wording of RBI's press release for Kotak, where it uses words like significant concerns, serious deficiencies, significantly non-compliant, outcomes far from satisfactory, etc., is also being seen as harsh by the markets. The bank said it does not see any material impact of the RBI ban on the overall business, but the markets seem to think otherwise. The stock tanked in trade today on the back of these actions. The target prices on the stock range from 1860 rupees per share from Macquarie to 2100 rupees from CLSA. Macquarie says that a good proportion of Kotak's assets and liability products are sourced digitally, and the ban on onboarding digitally is bound to affect growth in the medium term. It flags that Kotak has opened only 350 branches in the last 4 years, and it may have to step up the pace. It expects a D rating for the bank in the medium term, similar to what we saw with HDFC Bank after RBI action. Nomura says the impact on business and profitability will be limited, but there will be a reputational impact. Citi says RBI actions can adversely impact growth, NIM and fee income, and CLSA and Jefferies believe that profit impact will likely be modest unless the ban stays in place for long.
All right. Thanks, Ritu, for getting us all those details on the big story of the day. Now, Kotak Mahindra Bank is not the only bank that has come under the Reserve Bank scanner. In the recent past, there have been actions taken against other banks, and Abhishek joins in with all the details and the list of other lenders that have come under the RBI scrutiny. Abhishek.
Well, banks have come under greater scrutiny under the current RBI governor, that is Mr. Shaktikanta Das. Any lapses in banks' technology, processes or working has been scrutinized by RBI so that the system lapses are averted. Let's take a look at what are they. So in December 2020, RBI raised issues in HDFC Bank with respect to outages in the internet banking, mobile banking as well as payment utilities. RBI barred the bank from launching any digital business generating activity under HDFC Bank's digital program 2, as well as the fact that RBI also asked the bank not to source any new credit card customers. In March 2022, RBI found certain material supervisory concerns in Paytm Payments Bank. RBI barred them from onboarding customers and appointed an IT audit firm. RBI also found material supervisory concerns in outsourcing activities by M&M Finance. It stopped the lender from outsourcing arrangements in September 2022. SBM Bank India was barred from conducting transactions under liberalized remittance scheme in Jan of 2023. RBI saw material supervisory concerns of onboarding customers onto Bank of Baroda's mobile application. It barred Bob World with immediate effect in November 2023. Non-adherence to digital lending norms as well as deficiencies in key fact statement issued for the digital loan was seen at Bajaj Finance in November of 2023. So RBI asked the lender to stop sanction and disbursals of loans under e-com as well as Insta EMI cards. Paytm Payments Bank in Jan 2024, persistency of non-compliances and continued material supervisory concerns saw RBI asking the lender to stop taking deposits, have credit transactions, top-ups and other banking services as well. In Feb of 2024, RBI PPBL handles of customers, merchants to other banks as well were stopped. So RBI observed material supervisory concerns in gold loan portfolio of IIFL Finance. It immediately barred the lender from sanctioning or disbursing gold loans or assigning, securitizing or selling of any gold loans which were from IIFL Finance. Serious deficiencies were observed in loans sanctioned for IPO financing and NCD subscription of JM Financial by RBI. RBI barred it from financing against shares and debentures, sanction and disbursals of loans against IPO or debentures with immediate effect. The latest action from RBI is on Kotak Mahindra Bank. RBI found significant concerns arising out of RBI's IT examination done in the bank in 2022 and 2023. Failure on bank's part to address the concerns in a comprehensive and timely manner led to RBI asking the bank to stop issuing new credit cards and onboarding of new customers through their online and mobile banking application.
All right, thanks a lot for that, Abhishek. Well, moving on, Vodafone Idea is in focus after the company's FPO listed earlier this morning. Kumar Mangalam Birla, the chairman of the Aditya Birla Group, said that this was the start of Vodafone Idea 2.0 and that the vision of Digital India will continue to drive the company. In fact, Nisha also spoke to him on the FPO listing. Listen into that conversation.
Mr. Birla, many congratulations on this big fundraise. Do you think that most of the problems of Vodafone Idea that the group had been struggling with over many years, that is sorted for the next few years with this issuance?
I think so. I mean, without a doubt, right? I mean, we've been in the sector for 2.5 decades now. which shows our commitment to the sector and to Digital India.
Yes.
And this is, like I said, a fresh lease of life for the company.
And what about Industar stake sale? Do you have an arrangement with Vodafone PLC that the entire amount of their stake sale proceeds will be infused in this listed company?
Well, not really, but we're going to see as it comes. So nothing
What
specific at this point.
percentage, as per the arrangement, what percentage is there?
I think we are not talking about
Yes.
this
Yeah.
here, please.
All right, and the government stake sale, is there any indication on that at any point
Stake
to
sale,
monetize?
we're not talking about stake sale at all.
All right, so that was Kumar Mangalam Birla at the mega FPO listing of Vodafone Idea. You know, Sonia, they're true driving factors. The sovereign guarantee, because government has stake in this company, gives a lot of comfort to global investors. And the second one, that the investor community is really expecting a tariff hike soon. And those two factors also added to the momentum for this particular issuance. In fact, I also spoke to Atul Mehra, who is the MD and CEO designate of Axis Capital, which is one of the lead managers of the FPO, and got his view on the telecom sector as well as the success of this issuance. Listen in.
The interest of the investor in the telecom as a sector is huge. Number two, I think the message from everyone, including the government, was very clear that they want 3 telecom operators to survive and be there in this country. When you do an FPO, you have more flexibility. You can reach out to a wider audience, but at the same time, you have to grapple with 2 important things. There is a live market price and there is a live FNO price, which is very, very lethal. So you have to devise a strategy which fits into everything. It reflects 2 things. It reflects the depth of the capital markets in India. It reflects that there is a huge appetite for quality companies in India. So we are seeing a couple of things. Number one, the trend is very bullish on the capital market side. We are seeing a lot more companies tapping the capital market. The pipeline is growing. The pipeline is increasing both in number and in terms of volume.
Okay, let's slip into a short break on that note. When we return, we'll get you key expectations from the capital goods space this quarter in our segment Quarter Se Quarter Tak. Stay tuned. Well, as we discussed in the first segment, we're in the thick of the fourth quarter earnings, and as part of our special segment Quarter Se Quarter Tak, we line up the key expectations from each sector. Today, Vamakshi will tell us how Q4 will pan out for the capital goods sector. Over to you, Vamakshi.
Well, capital goods is a space that has been firing on all cylinders of late. The government support in terms of policy, infra push, big order flows, as well as de-risking of the global supply chain away from China has worked wonders for the sector. But does the sector have the power to rally further? Well, that hinges on the sector's earnings performance and the consistent flow of orders. In the quarter ended March, on an average, the industry is expected to post revenue growth of nearly 16%, which is supported by strong order execution and record high order books across multiple companies. Cost-saving measures and operational efficiencies may drive a commendable nearly 14% rise in the EBITDA. However, the margin picture looks quite mixed, which we'll explore shortly. On the profitability front, however, a 17% jump is anticipated. While order flow has been robust in recent quarters, a slight bit of moderation is expected this time around due to the ongoing elections. Nonetheless, steady order inflows are projected in sectors like renewable energy, transmission and distribution, defense, as well as some others. Private investment, which has been selective so far, is also witnessing some green shoots. So overall, the order momentum may see a healthy uptick only from Q2 FY25 onwards. Export orders, however, are a bit of a concern given the sluggishness in most geographies, geopolitical tensions, as well as trade disruptions. Now, against this backdrop, all companies are forecasted to achieve double-digit revenue growth this quarter, ranging between 13 to 25%. Margin projections vary. GE T&D, Kirloskar Oil, as well as ABB India are expected to witness an expansion of anywhere between 1 to 6% in their margins. On the other hand, BHEL, Siemens and to some extent Thermax may experience some pressure on their margins. With the exception of BHEL and CG Power, net profits are expected to rise for all companies. Now, in terms of stock performance, capital good companies have been a very bright spot, with returns exceeding nearly 75% across the board in the last 1 year. Year-to-date gains range from 18% to an impressive 114%. However, these strong performances have in turn pushed the current valuations well above the historical averages. The question still remains, can these valuations sustain? Will there be another leg of growth driven by private capex? Only time will tell.
All right, Vamakshi, thanks so much for getting us all those details. And moving on, sources tell CNBC-TV18 that the Association of Mutual Funds in India, or AMFI, has written to market regulator SEBI seeking relaxation in the new KYC norms for the investors that kicked in from 1st of April. In fact, Sonal joins in with all the details to fill us in on this one. Tell us, Sonal.
Thank you so much for that. You know, there's been a lot of discussion, a lot of debate going on, because since the time these new KYC norms have kicked in, there's been a lot of confusion. And on the back of this, we've been seeing complaints coming in from mutual fund investors. There've been a lot of discussion on social media as well. Now we pick up that the Association of Mutual Funds in India, the AMFI, has written to SEBI asking for some relaxation in these KYC rules. And the operations committee of AMFI is in conversation with SEBI, and we've written to AMFI, but we are awaiting a response for them, whether they or not they have written to the SEBI or not. Now remember, these new KYC rules, they kicked in from 1st of April, and investors have been facing a lot of issues with these new rules. For some of them, the new SIPs are not going through. New investors or do-it-yourself investors who are not aware of these rules have not been able to see newer SIPs getting debited or open new accounts with different AMCs. Secondly, if someone is looking at redeeming their money, they are not able to do that because if they have submitted KYC, it is not validated by the AMC, and at the distributor level as well, there has been some of the issues that they have spoken to about as well. The NRIs without Aadhaar are also facing issues in opening accounts with new AMC. So if you have it in something like an HDFC, you're not able to open it with Aditya Birla. So a number of issues that these investors are talking about, and on the back of that, sources suggest that AMFI has gone ahead and spoken to SEBI about it. Okay, thanks a lot for that. Well, as we slip into a short break, it's now time to shine the spotlight on the backbone of our economy, a celebration of your impact on India's success story. CNBC-TV18 and HSBC India proudly present India's biggest SME awards platform, honouring the small and medium enterprises that drive our nation's growth. Nominations are open now, and we invite you to become an SME champion. Your dreams power India's progress, and it's time to celebrate them. Scan the QR code now and be part of this monumental recognition at the SME Champion Awards. It's not just a platform, but an opportunity for you to step into the limelight.
Welcome back. You're watching Business Lunch. Now let's put the spotlight on the Lok Sabha elections. The second phase of the elections will see 89 constituencies in 13 states and union territories to go to poll tomorrow. In fact, our colleague Parikshit Luthra is right here to tell us all about the key seats, candidates and the constituencies to watch out for. Tell us, Parikshit.
Well, two issues have really dominated the discourse and news headlines over the last few weeks. One is the inheritance tax row, especially after the comments made by Sam Pitroda of the Congress party, and the Prime Minister has used this to hit out at the Congress and the opposition, saying that they want to take all your wealth away. Then you also have the Prime Minister's sharp remarks against the Congress over Muslim appeasement. The EC has also received certain complaints about that. So let's see what impact these statements and these campaigns have on the second phase. Now, in this phase, NDA had won 61 out of 89 seats in 2019. The opposition India bloc had won 23. NDA had 51% of the vote share, and 42% vote share was with the opposition bloc in 2019. 1,210 candidates will be in the fray, out of which 250 have criminal cases against them. 20 seats, all 20 seats in Kerala are going to polls. Crucial battles there are Rahul Gandhi versus Annie Raja in Wayanad, and also Shashi Tharoor versus Rajiv Chandrasekhar in Thiruvananthapuram. This is being called a battle of the Nayars. Then you have 14 seats in Karnataka. We'll be watching out for H.D. Kumaraswamy of the JDS and former Chief Minister, Tejasvi Surya of the BJP, and D.K. Suresh of the Congress Party. And D.K. Suresh is also among the richest candidates in this phase. 8 seats in UP going to polls with Hema Malini, again one of the richest candidates in this phase, Arun Govil from Meerut, and Atul Garg from Ghaziabad from the BJP. You've got 7 constituencies in MP, including Tikamgor, Damo, Khajuraho, Satna, Rewa, Hoshangabad and Betul. 8 seats in Maharashtra, and we'll be watching out for Amravati and Nanded being constituencies. Also Ashok Chavan factor. Ashok Chavan, the former Congress leader, also Maharashtra Chief Minister, had joined the BJP in February. Let's see whether he is able to have some impact for the Congress Party, for the BJP. In West Bengal, you have Bihar, Assam, Tripura, Rajasthan. There are also constituencies going to polls.
Parikshit, thanks a lot for that. Well, moving on, the chairman of the Indian Overseas Congress, Sam Pitroda's comments on inheritance tax have sparked a debate. Earlier this week, he described the inheritance tax in the United States as an interesting law. The Prime Minister slammed the comments, and the BJP has launched an all-out attack on the Congress, calling it as a dangerous intention. To discuss this, we earlier spoke to a whole host of experts. Listen into what they had to say.
I wonder whether in this age and time when the government is talking about ease of doing business in India, whether the government would really want to relook at introduction of all these taxes. So while the political debate is continuing, I really don't know what amounts the government is proposing to collect. Remember again that the moment you have an inheritance tax, people will plan around it, and therefore what sort of litigation, what are we looking at? I think we in India today are seeking FDI. We have ambitious growth plans, whether it's in terms of investment in infrastructure, etc. We need people to participate in that. And therefore, what may be good for UK, what may be good for USA, relative to where we are in our growth, may not be a right thing at all to do.
The economic history tells us that these were abysmal failures. Poverty never got eradicated. Income distribution never improved. And the country, relatively speaking, never progressed till the liberalization started in 1991. That to distribute wealth, you have to first create wealth. My own submission is that we are still at a stage in our country where a lot more wealth has to be created. We still have some distance to cover. We have a lot of objectives to fulfill. We must first let the wealth bloom in the country. You will have a flight of capital and flight of individuals. That's not going to serve the purpose of either addressing inequality or enhancing revenues.
Well, I don't think there should be inheritance tax and wealth tax in this country. We experimented with both. Like both the distinguished people said, it's been a failure. And you're not going to get anything. You'll drive away entrepreneurs. You'll drive away capital creation in this country. And I think that's not what India requires. Don't you want entrepreneurs to list? Don't you want entrepreneurs to create more wealth? Don't you want entrepreneurs to do much, much better? You'll kill entrepreneurship by doing this. It's not succeeded. Now, what is the solution? The solution is to persuade the rich to give away the money to create endowment.
All right, so that was a big debate. But there's a flash on the screen. Inox Wind has announced a bonus of 3:1. That stock has perked up 6.5%. In fact, it was already in the gaining momentum for the day. Now, as we wrap up on this edition of Business Lunch, here's a programming note for all our viewers. Our Friday special offering, Editors Roundtable, is now coming at a new time. Catch the biggest market headlines of the week with expert analysis from market veterans and our editors every Friday now at 3:30 p.m. Don't forget to tune in. Goodbye.